Treasury Secretary Steven Mnuchin is suggesting a new gambit to break the stalemate between the U.S. and China. The U.S. is weighing lifting China trade tariffs. Easing tariffs could be an arrow in the quiver, according to a source cited by Dow Jones. Meantime, Dow Jones is also reporting that U.S. Trade Representative Robert Lighthizer resists easing tariffs, but we are seeing that intraday lift here. The S&P 500 most notably. Take a look at this because now we've crossed above the 50-day moving average. A lot of market watchers were watching this level very carefully today, and with these headlines, we have easily surpassed that level at this point. So this is something we're certainly going to be watching.
Yeah, this is a big move, and whether there's a little good cop, bad cop being played here between Mr. Mnuchin and the people who would be a little more inclined to compromise than Mr. Lighthizer, who is a well-known China hawk, whether that's what's going on here. What you see in the markets is a move from basically flat to up 140 on the Dow, and I thought it was up 40 or something, 48 on the NASDAQ.
And real quickly on that, President Trump, it says in the article, this time is making it clear that he wants a deal and is pressing Lighthizer to deliver one. So if the president himself is perhaps looking, guys, to the markets as much and seeing the impact that this has had, now pressing for a deal, obviously that would be that could kind of break the tie.
You can bet he notices this on this news.
Sure.
Yeah.
Although you would think if these headlines had crossed maybe 6 months ago, 9 months ago, this would probably be much more on the S&P 500 compared to now after the markets have been so inured to all these trade headlines. Let's get to Bob Pisani at the New York Stock Exchange, who has watched the markets respond to every trade headline over the past, 9 months plus.
Oh, boy. And this was good for 12 points. We saw trade names like Boeing move up, Caterpillar move up, the usual group. So if you think about the worries that are still out there for the markets, which we've been talking about, China's slowing, number one, and the Chinese government is actively now stimulating. Number two is fear of an earnings recession, which was a major problem at the end of December, going negative on earnings for the year or flat on earnings. That has receded somewhat as the commentary generally has been supportive of lower but still positive earnings growth in 2019. And the final issue was the China tariff story. So to the extent earnings have gotten a little bit better, China is stimulating. The tariff is the one big X factor that's still floating out there. And if there can be some kind of resolution for that, it's certainly not an all clear, but three major issues are a little less of a concern for the market, and that would definitely be a positive overall.